All right, what's up, guys? Let's load something up here. I do want to go over something. I had this video I made for you guys. I know a lot of people um, making some good money in these markets, but I just wanted to actually go over something because the other day a lot of people were having some troubles trading those choppy days. So I made a video how to avoid the chop, right? So here's the video. Trend line zone. I got everything public on YouTube. I don't really like it that way. I'm more of a private person. Don't mind hanging out in the discords and stuff like that, talking with people, sharing stuff that way. But I wanted to share it with some more people, and I didn't know any other way to share it with some more people without having the Discord. I'm sorry, without having the YouTube channel public in the videos. All right, so to briefly go over what I was looking at, right? I mark London high and London low. That is going to be everything for me when it comes down to these chop days. I might also compare it to the previous day London high and London low, right? So here's the video how to trade the chop, right? Kind of how to trade the chop, maybe how to identify it's going to be a choppy day. That's up to you. If you want to trade the chop, you can trade the chop. If you don't want to trade the chop, you don't have to trade the chop. So I traded late last night. As you can see, we had some great moves last night. So I traded late last night. And from there, I called it quits, and then, decided to sleep in, rest. No reason to wake up early when, it is what it is. You're gonna have to decide for you when the best times to trade. And when the market is moving like this overnight, I like trading that. Right, it gives some great opportunities. And then when London open hit, we didn't really get the continuation like we got when we broke from the days open to London, right? We didn't get too much more continuation. When it's moving like this in Asia, I'm almost always expecting a reversal back down, either in London or New York session. But when it moves like that, we're in a bullish market. We just broke out of some levels, and we're going to go over that real quick, right? So let's go up to the daily, because that's what matters the most on this, right? We're going to do two things. I hope my charts don't overwhelm people. I have these areas. This is going to be, so this is the rollover range. We've discussed that before. This is where majority of December positioning occurred. So in this area is where the majority of December positioning occurred. And that can be seen by checking the open interest during the rollover week or the weeks leading up to and the rollover week to see when the majority of contracts move to the December contract, right? I know a lot of people look at volume. Oh, trade the contract with the most volume. Well, I'm looking at, okay, where are those contracts opening? Where is that open interest occurring? Where is the open interest, right? The open interest is here. So if the open interest is in this range here and price is up here, what does that show you? That shows you that the buyers here are making money, that the sellers here are getting hurt. All right. Previously, I know I went over this level here. This invalidated our trap. So we'll duplicate this real quick. This is everything I'm watching. I have like a multifaceted way of watching the market. So we're going to duplicate this window, and I'm going to get rid of all this, right? And we're just going to go back to the trap video. Back to the trap. And when a trap fails and you stop them out, you expect a sweep of liquidity and maybe some continuation, right? So to make this easier, this is our move. We have our, let's make this a little, can we make this bigger? Thick point, chisel, round, we'll do a round. This is our move down. This is our pullback. Then we had a sharp move down. Pulled back above the swing here. So now we're above this swing. Now notice what line we have. See how I have this line here? This line is still on my chart because it's still valid. Or not valid. It was valid for this trap, right? And it's going to be on my chart until we start forming some more structure, we start developing some more patterns, and we go from there. Look what line I have up here. What is that line? That is this swing. This swing right here that we broke above here. We broke above the pullback to potentially trap. Everybody up here is potentially trapped for this attempted move down. But what did we do? We failed, right? We did not take out the low. We bounced. And when we bounced, we came into the rollover area. This is the rollover area. And the key spot there is this prior swing, this line. Now, we open interest moved to the December contract in this area. And then we broke out when the majority of contracts were on there, the Thursday during rollover week. Came back, retested it right there, and then we've continued. This area here invalidates the trap. It means the trap is no longer valid to the downside. So downside, no more, right? So let's mark this off. This was the prior swing right here. Right, that was the prior swing. It's a little bit higher, but I moved it. Let's see, did I move it for a reason? I think I just moved it to the rollover range, but for sake of argument here, prior swing is right there, right? There's our prior swing. Right there. This is going to be where the bull trap seller stop losses. Bull trap seller stop losses are above here. Because when they enter short, they're entering short right here. And I know I've had this on my chart before, and I just want to go over it. And they're going to be entering short below, right? And entering short below that, you know, there are going to be shorts entering below there. That's going to be the momentum traders entering short below because buyers are getting stopped out. That's what's going on right here. They're entering short below, right here, because buyers are getting stopped out. And as you can see, that was that red candle. We came down into the prior cost basis, and then we bounced. When we bounce, we look at the same levels, right? We came right through this level here and ripped. We ripped back up. We ranged because this is our rollover range. This is our rollover range here. And all the September contracts were rolling into the December contract, and a majority of them were occurring in this area here. And then we started to bounce. We did have some positioning here. We had some early buyers into the December contract. I was watching that occurring here, right? So this entire area is still valid for me for some buyers, right? Dip buyers are, you know, you might get some dips in this area potentially, but we are continuing bullish. So we had the rollover range, and then the day we broke into majority of volume, majority of open interest being on the December contract was this green candle here. This was on Thursday when the contracts expire on close Friday, settle on Saturday. This candle right here, right? So this candle right here is going to be the candle. Right there. This candle right here is the candle that we're looking at when Thursday, you know, Wednesday into Thursday, we spiked up, broke out above the rollover range, came back, retested the next day on Friday. then Monday, Tuesday, Wednesday, Thursday, right? So this week we've been holding above the rollover range, which has been signaling a bullish move for me since we retested. And then the next level that we held perfectly was this prior swing. We held this prior swing perfectly. This prior swing right here. This one. This prior swing got held perfectly. Right? So zooming that in on a faster time frame, you can see this level held over the last few days. And we can copy and paste that to a chart and show that, right? And onto a faster time frame. So since we held here, we know buyers came in down here, came up, sellers tried to bring it back down below this swing, couldn't do it, and then we started to move up. Bull trap seller stop losses are above this candle right here. But remember, we're on a new contract. These are technical levels, right? So we're on a new contract. This area is the December contracts. All this positioning and selling to try to break it down, that was all those contracts were on the September contract. You got to remember, if somebody was trying for a move on the September contract here, the December contracts, majority of them rolled in this area. Some rolled down here, but the majority rolled here. Are there really stop losses up here? Maybe. Maybe some people rolled early, extra early. But once we break that on a technical level, that's a technical invalidation of a bull trap. So once we broke it yesterday, we got a little sweep of liquidity and we saw some sellers try to defend it. Perfect. Once we saw some sellers try to defend this area here, saw sellers try to defend. This was our high yesterday. Sellers tried to defend that. They came in. That means there are sellers above that we know now we can get some stop losses to fuel it. So that's what we're watching on a daily, right? Do I expect a retest all the way down here? Maybe, yeah. Look at, I look at where the potential technical levels and stop losses are, right? We came kind of close to it there. We're at 50,550-ish. Those are big levels. Markets love the whole numbers, the quarter numbers, the half numbers, right? That's what NQ respects. And you can't just say to a tick because, it's whippy. Give yourself a little bit of space around those levels. So that's what I watch, right? So we have the bull trap invalidated, the invalidation. So right here, we have bull trap is now invalid. So now that we know the bull trap is now invalid, I am not looking for the continuation to shorts down here to break new lows. I'm going to start looking at some other setups and other patterns, right? That's what I'm watching. So we'll get rid of this. We'll just put this daily chart over. Now we're going to get into the daily chart with the rollover range, right? Here is the rollover range. The majority of December contracts positioning occurred in this area. And you can confirm that next rollover. Next rollover, go on bar chart the week, 2 weeks prior and look at where the open interest is. And then start monitoring the open interest. At the close, you can look at the CME to see where the contracts rolled. Start marking off your levels to say, this is a significant area of interest for the December contracts. Obviously, they're going to be changing positions, short time frame traders, but the long-term time frame traders, a lot of positioning occurred here. Some occurred up here, but majority occurred right here. So all we did was copy and paste, right? I drew a range around the, I drew a range around the December contract where the majority of positioning occurred. I drew a range. I copied that range and pasted it up here. So now we have a range measured move. Let me get rid of this. So there we go. So now we have the December contract rolled in this area. I'm going to keep it highlighted. We drew a range. Here's our midline. I always use a 50% midline on these ranges for targets for potential. If I was buying a breakout, I look to take profits here. If I was buying the breakout here, I look to take profits at the midline. So now that we did that, we came up. Yesterday we ticked right to it. I can zoom in Really close. We ticked exactly right to it. That signaled to me yesterday, do not buy this because we swept the liquidity above this candle, potential liquidity sitting up here, and then we started to sell off. Look at that sell off. Where did we sell off to? About about a quarter of the way down. Then we opened last night and we just started to rip, right? This here, this level, after sweeping the liquidity yesterday, said, okay, for the day, let's just calm down. Let's reevaluate. We're going to reevaluate what's going on here, and don't chase long, right? Because we're just starting to get that liquidity sweep. Let's reevaluate. Let's zoom in on the faster time frames and see if we have any levels and setups that are signaling for a continuation yesterday. We're not talking about today. We're talking about yesterday. Today's a different story. Market opened at 6 p.m. and then we just started to rip through the Globex session into London, where we started to chop and then sell off a little bit. So now that we know that, on our daily time frame, we have the sentiment, moving into today, New York session, let's say, right? So yesterday, that was what we saw. All right. I know I posted, don't chase longs. This is what I'm watching. We did not break out of yesterday's initial balance. Yesterday's initial balance was considered the high of the session, and we didn't break out. We didn't extend. We didn't extend below the initial balance low, and we didn't extend above the initial balance high. So there's that. A couple more things. I know I have a multifaceted approach here, I guess you would call it. What I like to do on these, a lot of people will draw trend lines. I like to draw some trend channels sometime, right? I drew this from here to here, and then I connect the body. This wick is significant to me because that was the technical level where the bull trap invalidated above. So I drew this trend, trend line zone, I guess you would call it, wick to body and over. I took that, I copied it, and then I pasted it onto this chart. So that is going to be this level right here. We will only focus on this level. So we'll make this a nice little plum color. Is that going to make it easier to see? Maybe we'll make it a royal blue. Maybe the plum. All right. So let's get rid of the what do you call it? The range, the two ranges, which was the positioning. And we're just going to look at, for now, we're going to look at this, and then we'll add we're going to go back. Sorry for getting ahead of this. So we'll go back. Let's take so this is how I do it, right? Let's just kind of show you. So we know this was the December contracts rolled in this area. I'm just going to take this, copy it from this chart, and I'm going to paste it onto this chart. And then this is the second, this is the above, this is copy. So I copied it here and I pasted it above. So we're going to copy that one and paste it there. This is yesterday's price action now, right? So let's just look at that before we get into the zone here, this trend line zone. All right, so we know this area down here is going to be where the December contracts rolled, December positioning. We know this is December positioning down here. We know above is the measured move. Down here is the December positioning, right? We broke out. Where did we come down to test? The top of it, right? Then we continued. Look at the midline. Look at why I use the midline for profits. If you were in on the breakout, take some out off at the midline. If you bought the retest and then the continuation, you take it off at the midline. Look at the choppiness at the midline. And then look where we ticked to yesterday. And if we zoom in on that, look at why those levels are significant. That was why yesterday I was starting to think we did not break out of the initial balance that was established, right? This is the 1030 candle. This is going into 1030, the initial balance. We did not extend the initial balance and get a failed auction, right? We didn't break the initial balance yesterday and continue, and we didn't break the initial balance and get a failed auction and then rotate down to the initial balance low, which we will zoom in on that chart, right? I hope I'm not throwing too much at you guys. So now that we know that this is the range measured move right here, completed range measured move, right there. Copy the December positioning, paste it, and put it above. That is a big area yesterday to start taking some profits. You don't want to have a large position going on expecting a breakout, right? If it didn't immediately quickly break out with a lot of volume and a lot of volatility, like we did overnight, you want most of your position off, right? If you bought back here at this midline and you were holding, trying to get profits up here, this is a good spot for, this is a good target, right? I'm just talking about how I trade. Now that we have those two ranges and the range measured moves, let's go ahead and get rid of that. And we'll just go right here onto the daily chart like I showed before. Using the daily chart and zooming it in on the 4,000 tick chart, I am taking this trend line zone, or kind of like a channel zone. We're going to paste it. We pasted it, shows up right here. Make this chart a little bit bigger. Now, this is to the left. We don't have anything because we didn't get that high. That was, it connects to that prior swing over there. Let's see if we can zoom out and get to it. We'll make it fat. We'll make a bigger chart here. 10,000 tick. Might take a minute to load, but I just want to show how it correlates onto the chart. All right, there we go. This wick up here, this area here is on the daily chart, and I connected wick to body. And I connected this wick to the wick over here, and then down to the body. That's all I did. It's not going to show perfectly on a tick chart in comparison to a time-based chart, because on the day, you know, the wick is going to show on the day near the close. But that's what I did, and I will zoom in on a 4,000 tick chart, which I like to do my next level of analysis, right? I'll do my daily and then like my 4,000 and then zoom in on my entry charts. So here we go. We started to look at the midline on this level. And I remember I said before, this is going to be the battle area. This is the battle area on the trend line zone. The trend line zone, this is the battle area. Everywhere in here. They're going to battle to break above, and they're going to battle to try to stay below. The midline, look at the bottom here, ticking to it, the midline, the battle. See the battle that occurred when we got in here? See the battle below to try to stay below it, right? There's a lot of choppiness. Take that into consideration prior to, right? I knew this was going to be a battle area. All right. Now that we got yesterday, yesterday we broke above, right? We broke above this battle zone. We ticked up here. But on the daily chart, that signaled an area to, because right here on the daily chart, that signaled the range measured move. Right? We broke out. That was a range measured move. We would have need to pull back, stay above the battle zone, this trend line zone. We would have need to stay above to get the continuation. But instead, we battled and fought off. We fought right here. We fought right here, and we broke back down. look at the midline. We kept wicking below and then closing above the midline pretty much every single time. Sellers couldn't break this midline. And then we ripped overnight. So let's get rid of this range measured move for now. We'll just look at the battle zone. We broke out overnight. We sold off to the top of the battle zone. Double bottom. See if we can get a V bottom from here, right? This is also a reversal pattern. Since we didn't make new lows, this is a reversal pattern. I look at this as a strong move down. Try once. Try twice. Entry here. Entry here for all these bears stop losses. And I look for this to continue. The invalidation level of this setup is all the way down here. So if they make a new low, the invalidation setup's here. So this could turn into a range, or we could get the continuation as we break here, eventually come back, retest, and go. This EMA, I would like the EMA to catch up. And if the EMA catches up and we bounce off of the EMA, perfect. This is a nice little reversal pattern that we're seeing on the 4,000 tick chart because we didn't make a new low here. It's a two-step. It is a two-step trap. You have a failed trap. You have a failed low, not a failed low, I'm sorry, not a failed trap. We have a failed low here, but you have, look at it in reverse. Don't look at this down move. Look at this move. Move up, pull back, higher high. Trap below here. All the buyers all the sellers that came in below here are now getting stopped out above here. So we should get some nice continuation. Should get some nice continuation. I will look at this as a V bottom, zoom it in on a faster time frame, and I will draw my hidden trend line where I connect like this, and I bring it down to my low, and I will look for entries. If we continue to chop up, entries on this trend line. But we're getting a little bit further ahead. I will go over this pattern, so I'm going to put this on my chart, go over this reversal pattern. This is a good reversal pattern here. And I want to go over this, so I'm going to put that on my chart. So now that we know the significance of this battle zone, this trend line zone that we have on the daily chart, connecting the wick to the wick, down to the body, why those levels are significant. We know the significance of the range measured move, and the range measured move is based off of the rollover range, why that sold off yesterday, and look where we bought right up to it, right? We sold off to it, and then we bought and then started to rip. Now let's zoom in on my 500 tick chart, and we're going to go over the London zones and why today is different than the last video. Let's go over the London zone and why today is different than the last video, which was yesterday, because where's my 500 tick chart? Daily, 4,000. There it is. Here's my 500 tick chart. So let's go over yesterday before we get into today. Here is the London zone from yesterday, right? We will take yesterday's entire chart and we will redo it. Initial balance low. So we have a London high and a London low. You guys know, and I've said it before, best time frames that I have found for London to draw some sort of a zone to look for continuation and breakouts and breakdowns outside of the London session is going to be 8 a.m. I'm sorry, 3 a.m. to 8 a.m. That's what I have this green zone here, right? So I have my London low marked off with this purple line here. I have my London high marked off as this purple line up here. So I have my London high and London low. London low, London high. So I look for extension beyond the London high in continuation. I look for the London high if we do extend and break out as a nice dip buy opportunity if we are going to get that extension. If you are drawing some sort of a trend line here, you got a nice little trend line right off of there, give you some added levels to continue, right? You also have the London high. You want to see buyers defending this area. As you can see, there were a lot of sellers trying to break down. There was a battle occurring here. There was a battle occurring here. And we did not break below the purple line and close below and rotate to the London low. We stayed above. We stopped out all these sellers for this move up. At 9:30, market open is somewhere right, where are we? 9:30. So we had here's 9:30. So New York session opened up around here. The volatility of the open of the New York session broke us out of this choppy area here where there's a lot of sellers and buyers coming in. We stopped out those sellers and then continued up, pulled back to the area, to the almost exactly ticking to the London high, and then we got our continuation up. Until we extend below, not extend below, but fail the London high, come up and we see a battle, until we see this, I'm not looking for the London low. I'm looking for the London high to extend. So since we did not open inside of the London zone, we did not open in here, we opened above, I'm looking for the breakout or the breakdown. We broke out. Came back, retested, I'm looking for the extension. Once you break, structure here, that plays a significant role. As you can see, coming over, we tried to buy off of it all day long. But great dip buy opportunity. I bought some here, and I sold some on the way up. The other thing I was looking at yesterday was the initial balance high and the initial balance low. The initial balance high is here, 10:30. So you mark off the low of the session between 9:30 and 10:30, which is this white line here. So this white line marks off the IB low, and this white line up here, which is around 10:20-ish, is going to mark off the IB high. So the initial balance high, the initial balance low. Okay, let's go back to the 4,000 tick chart. Why is this level here so significant? I'm giving you guys the raw, kind of uncut thoughts that I have on the market during the day. It's my 500. There's my 4,000. So let's go to yesterday. Why is the initial balance high from yesterday so important? We'll copy this, and we're going to paste the initial balance high onto the 4,000 tick chart. Why is the initial balance high so important without extending? So there's our IB high. Let's take this, copy and paste this here. And we'll take our daily. We're correlating the daily chart to the 4,000 tick. So this is our range measured move. Remember our rollover range, copy and paste our range measured move, put it there. Look where we are. The top of the range measured move as well as establishing an initial balance high. That's why that level is so significant. See that? That is our initial balance high. Now we needed to extend beyond that yesterday. We didn't even break it, but we needed to extend beyond it and get a continuation for the bulls. For the bears, we just sold off and then the overnight session ran up. But if we broke above and then failed and closed back down, we look for a rotation back down towards the initial balance low, which we did not get. We didn't get either. So yesterday turned into a range day. Even though we broke above the London high, we turned into a New York session range day. Because we have our initial balance low and our initial balance high. Right? This is a regular trading session day. We did not, it is a choppy move down, but a better move would have been a break above and then a failed auction, and then we could get a nicer move down to the initial balance low, which we did not get. So this is like a regular trading session day. This is why I use the London high, London low, as well as the initial balance low and the initial balance high. Right? So we came back, so we broke at the New York session, came back, tested the initial balance high, the London high. We broke up, found the top of the rollover range, the measured move, then we started to choppily sell off. Where did we sell off to? London high. I know a lot of people chased this and got stopped out. We held the London high. We are extending above the London high. Even though we're retesting it, looks like we want to extend above the London high. We're also holding the initial balance low for the New York session. So we didn't break below the London, we didn't extend below, right? So we didn't get a trend below the initial balance low. And if we did get a trend below the initial balance low, my next target for shorts would have been the London low, which we did not get. So the overnight session hits, and we rip. We rip. Rip. All right. Now, on this session, same thing. Mark my London high and my London low. Right? That's my green zone. My green zone correlates to exactly 3 a.m. to 8 a.m. So here's our London high, and here's our London low. Let's just make sure I have this correct. Yep, London low, London high. Now that we have that, let's just mark that off. London low, London high. And our London low. All right, there we go. London high, London low. So what do I know? I know that I want to look for extensions beyond the London high. If we do break above, which here we go, we're at 9:15, 9:30. New York session opened right here. New York session opened right here. I'm looking for New York session to continue to extend the London high, or I'm looking for it to fail the London high and rotate all the way to the London low. With consideration in mind that you want to look at the midline between the London high and the London low for potential areas of profit. So if that's our midline, if we drew a range somewhere, I don't want to have it on top of it because it'll make it possible. So there we go. Somewhere there, right? We'll go a little bit higher. No, this would be a nice little area of profits if you faded the open. Maybe some runners to the London low. But that's my significance of the London low and London high at the open. We rotate it down to the London low. From there, I look for bounces and then breaks, and then where is the battle? Who wants to defend the London low? Do the buyers want to defend the London low, or are the sellers trying to break down below the London low, right? So we did not extend, now we know, at the New York Open, did not extend the London high. We have not extended the London high yet. And then we know that this here is the initial balance high so far because that's 9:30 a.m. So that white line is going to be potentially our initial balance high as long as we don't continue to extend. So let's watch the New York session from 9:30. We had come down. We sweep below the London low, come back, buyers try to hold, break back down. We make a new low, lower low here, come up, retest exactly to the London low. Then we start getting our continuation down. Start getting our continuation down. We sell all the way off. Where do we sell off to? We broke back below the initial balance high from yesterday, but that's where I was looking for the continuation. We got that continuation. We broke the initial balance high from yesterday, so I will take that off of my chart. That happened overnight. So I'll take this off of my chart, right? I will keep the London high here because that was a significant level of buying yesterday. Significant level of buying. You can see this is why I'm going to keep this London high on. It's because this is where the buyers were trying to defend to get the breakout. This level here was where we broke out from the initial balance high from yesterday. So we're coming down and we're bouncing around here, and then we're continuing up. Areas that I'm looking for. I am looking for the London high. Or I'm sorry, London low. That was where we sold off. That was where the sellers are defending. See this? See here? The sellers are defending this area. Then we finally got the move. Now that we have pullback, first attempt, second attempt, failed at making a low, I think. Let's see if we failed. Did we make a lower low? Nope, we've just failed by like a tick or two. So that brings us into the reversal pattern. This is the level that has to hold. We're not really getting that push up. We like to see this break, pull back, and then push. So this is not that strong of a reversal pattern. I am not expecting this to just continue to rip. It might be a grind. Watch the grind. Be very patient. Don't get stuck in this this loophole of trying to buy higher highs and then having the sellers just slap it back down. Okay, so that's that. And finally, I'll go over this reversal pattern. I know this video is going to be a little bit longer, but this is everything that I do. I follow the price action all the way over until I know exactly, based off of my setups and my strategy, what is going on. So let's go over this reversal pattern. This reversal pattern is based off of traps. I want to see a move down. I want to see sellers try once, sellers try twice, and fail to break the low. This is the low. I want to see them fail to break the low. But in the process, I want to see the sellers get trapped. I want to see some late sellers get trapped below the swing, because this is a move up. This is a pullback. And this is a higher high. And this turns into a pullback below the prior swing here, trapping sellers below. Then I want to see that move continue, right? And when that happens and it's in the inverse, this is where stop losses are, and you know that this is the area that needs to hold above. Now that this area needs to hold above, because you have the sellers trying down, right? And then they try once, they try twice, and when they do, they break this swing. Then we go up. It has to look like this for this setup, right? It has to. You have your first and second attempt. But your second attempt has to start above the first attempt. That's what triggers the sellers getting trapped here, and then stop losses up here. A new low will invalidate this. Sellers making a new low will invalidate setup. The setup O. So now that we got that, sorry, my wife was texting. We need to stay above here for the continuation. We are looking for a V bottom grind. And to buy off of this level on the way up. But we need to see a convinced grind. We need to see a convinced grind. This is a miserable grind. When people are trying to buy this grind, they're going to get chopped. So this signals to me, after a V bottom, failed low V bottom, big push up, this is going to be a grind. This is stay out. Stay out, be patient. That's this level right here. You got to stay out and be patient. As this grinds up, stay out and be patient. Know that there are going to be maybe some sweeps of liquidity and then pushes up, or maybe they're going to sell back off. This could establish a range as well. This is everything that I go through. This could just establish some sort of a range. So that's what I'm watching right now. Going into the close of this session, are we going to hold here overnight and continue some sort of a grind? Or are we going to sell off into this range? Are we going to hold and potentially find some sort of a hidden trend line at this area right here? We're going to get a hidden trend line somewhere here and buy off of? Who knows? But that's it. I hope this helped you guys. I know it's almost an hour long. That's exactly what I do when I'm starting my day, when I go through all of my charts and I correlate everything from daily to 4,000 tick. What are my setups? Are my setups valid on the daily? Are my setups valid on the 4,000? How's my entry charts looking? And then I go. So right now, we know we are below the London low. We're below the London low. We didn't even put our New York session. Where is our New York session? This is our New York session initial balance. Somewhere right where's I didn't even add that to the chart. So this is going to be our initial balance low. I forgot to add this. Sorry, guys. And we broke below the initial balance low, and we just could not get the continuation. We did get a nice move below the initial balance low. So you could have caught something there. But now we're fighting. Now you can see the significance of this level even more, right? This is the initial balance low that we're trying to reclaim and then be back inside. All right. That's it. Hope this helps you guys. I know it's a little bit longer. I'll break down some of these setups a little bit more, but I just wanted to go ahead and show you guys this. All right, good luck.